A lot of people assume that their family can't really help them buy a house unless they just give them a big check. That's one option, but it's not the only one. The other option that exists doesn't require anybody to have a stack of cash sitting in the bank, but it still allows family to help family buy a home. I'm Rebecca Richardson, aka the Mortgage Mentor, and my channel is here to share everything that I've learned in the 20 plus years of being a lender and helping people take mortgage information and apply it to their real lives so you can help get ahead and get what you want. If this is the first time that you're hearing about either of these options, stick around because just having the knowledge that these are out there is half the battle. So why does this matter? When people hear about a gift, they automatically think about mom and dad or grandma and grandpa stroking a check. And again, that's one option that we're going to get into, but the other one is also called a gift of equity. So when you're talking about a gift with family, it really does come down to the loan type that you're using and what that family relationship is. Typically, as long as it's parent, grandparent, sibling, some loan types do allow for close family friends, but for the most part, it's typically going to be close family that can be the donor of that gift. If this scenario sounds like your family, please drop a question in the comments. Reason being that the details vary a lot depending on the loan type and how the home is titled. So I want to make sure that you're pointed in the right direction and you've got great information before any money starts changing hands or contracts are written. So what we're going to talk about today is the traditional gift option that a lot of people think about, and then also this concept of gift of equity. When you're talking about gift in the traditional sense, as far as covering the down payment, some of the down payment, maybe the down payment and closing costs, basically anything that is coming from someone other than the borrower to the purpose of that purchase transaction or to help with the goal of that purchase transaction. The biggest thing is to keep in mind that it is truly a gift. It is not a loan. So whether it's an FHA loan, a conventional loan, or another type of loan, there are guidelines around, again, who can be that donor, and also that donor is going to sign something called a gift letter. The gift letter is saying that this amount that is being given for such and such property addresses purchase for the borrower, for the buyer, that it is a gift and not a loan. So sometimes some families will say, well, it's a temporary loan and it's a loan with no payments, no interest, those kind of things. It really does truly have to be a gift. So keeping in mind that the donor is going to sign a letter saying that it's a gift and we're treating it as a gift. A loan would be something totally different, but a true gift is being given without expectation of repayment. The documentation looks like this. We're going to have that gift letter that is going to say how much is being given, who the donor is, what the family relationship is, and the address of the property, and that there is no expectation of repayment. So as a lender, we're giving that to our buyer to go and get signed once, again, we know what the purchase price is, how much is needed, et cetera, et cetera. Beyond that, depending on the loan type, there will be different documentation requirements. But in general, we have to see the paper trail. So we need to see the money move from the donor either into the borrower's checking account or to their checking or savings account, or it can be wired directly to the attorney. So what we're going to do is once that money has moved and it's available funds, we're either going to get an updated bank statement showing the deposit, which also matches up with the gift letter, or if we don't have enough time to wait for a statement, we're going to get an activity history that shows the money coming in and that now it's available for our borrower to use. If the donor decides not to send it directly to the borrower, but send it to the title company or the closing attorney, then we're going to be asking them for proof of receipt and that they have those funds sitting in their escrow account at the attorney or the title company's firm. One thing to keep in mind is that sometimes people will say, well, should I get a gift before I even buy, right? So maybe my parents have said that they're going to give me $10,000. Should I go ahead and get that now and put it into my bank? You totally can. Keep in mind that if money is deposited, we're really only typically looking 2 months back in terms of 2 months worth of bank statements. So if, let's say, you're getting that gift now and not buying 6 months from now, we're not getting a gift letter. We're not even treating those assets as a gift because they are considered seasoned. Seasoned means that it's basically been there long enough that that gift is no longer showing up on a bank statement. If that's the case, that's cool, that's fine. But honestly, gift documentation is not difficult. It's not a big lift to do. So if this is a situation where maybe your donor doesn't want to gift the money until you're officially under contract or know exactly what you need, that is fine. And it is a normal thing that happens as far as documenting that gift. And it's just a normal part of the mortgage process. So I wouldn't stress out about the timeline. Now, totally different would be a gift of equity. And from the standpoint, what is the same is going to be who the donor can be. So depending on the different loan type requirements or loan type guidelines, the donor does have to meet whatever those donor requirements are and have that family relationship that's needed to meet that guideline. But you're not actually giving a gift in the sense of, again, wiring money or writing a check from the donor to our borrower. How a gift of equity works is when someone is purchasing a family member's home. And let's say that, the home is worth $400,000 and maybe grandma owns $100,000 on it. So, she's like, you know what? I don't necessarily want to make all of that $300,000. I don't need all of that profit, but I would love for my grandchild to buy it from me. So what the donor can do, or in this case, what grandma can do, is instead of, necessarily kind of writing a check to help their grandchild buy the home, if their grandchild is purchasing her direct home, she can use the equity as a gift. And how that would work is still she could sell the home for $400,000, but the borrower or the grandchild in the situation would get the loan for whatever percentage that grandma is willing to give as a gift. So what does that look like for math? Let's say that our borrower wants to do a conventional loan with 20% down, so there's no PMI. Again, I will continue to preach this, but as a PSA, you do not have to put 20% down to get a conventional loan. You can put as little as 5% if it's a repeat purchase, or if you're a first-time home buyer, you can put as little as 3% down. But let's say that in this case, grandma is willing to give enough so the borrower, their grandchild, has a 20% down payment. So if the purchase price is $400,000, that means that the down payment would need to be at least $80,000. So our borrower is getting the loan for $320,000, so 80% of what the sales price is. Now, let's say that grandma's really generous and she's like, not only am I giving you this 20% down payment, but I'm also willing to pay for your closing cost. And so for round numbers, let's say that that's an additional $10,000. So how that's going to work on grandma's side is the purchase price is $400,000, and then on basically the closing disclosure, on kind of the final statement that sellers and buyers both get that gives the accounting for the purchase, it's going to say $80,000 is going to the grandchild as a gift, $10,000 is going to cover their closing costs, and so her profit is going to be not based off of that $400,000, the purchase price. It's going to be based off of after that down payment gift and the closing cost gift has been deducted. So in this case, $310,000 minus any mortgages that are paid off and seller closing cost, and that is the net that they're going to walk away with. So can this happen for everybody? No, because not everybody necessarily wants to purchase their family home. Not every family is willing to necessarily, give a gift of that size, but you could do as little as 5% for conventional, or 3% for conventional, or 3.5% for FHA, or not pay closing costs. But it is a way to essentially leverage that equity, and that money exchange, if you will, that gift exchange happens from the standpoint at closing as far as how the accounting of all those numbers work. So it is a really unique thing, and it is a very cool thing, I think. I love working with families that are doing gift of equity because there's something special about keeping the family home in the family. I think it is a really cool way for family to help family, and it's something, at least knowing that it's out there as an option to help both generations. One generation's maybe ready to move on to their next home, but then also to give, their child or their grandchild a leg up without having to dip into their nest egg. A couple other things to keep in mind with a gift of equity. Usually the gift of equity is typically written into the contract. And because most of the time it's within the family, sometimes realtors aren't involved. So you will want a real estate attorney or maybe a realtor to help represent the transaction or again, a real estate attorney or title company that can provide a contract to make sure that everything is captured the way that it needs to be. But the gift of equity can be reflected in the contract. And on some loan types with some lenders, you will still have the gift letter, same as if you were writing a check. So some of the documentation is similar, but a lot of this really happens with how the purchase price and how the math is working at closing. Last thing to keep in mind too with gift of equity is the home does have to appraise because it is a standard purchase. So, even if in our example, maybe the home was worth $500,000, grandma could sell it for whatever she wants to sell it for. If she wants to sell it for $400 and still give a gift, she can. But if the home isn't worth at least what the purchase price is with the gift, however much that is, if it's down payment and closing cost or just a portion of the down payment, the home does still have to appraise for whatever the contract is written for. I would say the practical takeaway that I see is with all the pressure on affordable housing and home prices in some areas and some price points really outpacing what incomes are, and that's a bigger topic, different topic for a different video. But from that standpoint, I do see more of this type of scenario of family helping family, either giving a gifted down payment or even the standpoint of a gift of equity, because again, making sure that that family home stays in the family, and then also it's helping that next generation enter home ownership with a little bit of an easier path than saving up for their entire down payment. And I would also say that typically when you're talking about money within families, sometimes it can make things a little sticky. But I would say just with the dynamics that we're dealing with in the housing market right now, it's at least having a conversation with your family to see if any of this is an option. You want to make sure that everybody is very clear on what the purpose for the money is, where it's coming from, that it is a gift, that it's good for the family dynamic. But I do see it happening more and more often, and I want to make sure that people know that it is an option out there. And my last advice is, if this is something that you're thinking about, whether it's maybe a gift or particularly if it's a gift of equity, you're gonna want to talk with a loan officer before you structure anything. And you want to make sure that you get that right before any money starts changing hands or a contract is written. If either of these sounds like it might apply to your situation, it's worth understanding how these work so you don't assume that the answer is no. And a lot of families do have the ability to help, they just don't know how to do it correctly. So if you're navigating a situation where a family wants to help and nobody's sure what direction to take, this is exactly the kind of thing that I cover on this channel. So subscribe if you want more of this. No fluff, just the stuff that matters when you're in the middle of decisions, so you make sure that you're able to actually get what you want in the best way possible. I am here to help with any questions that you have, so feel free to put any questions in the comments or reach out to me directly and we can talk through your scenario, and I'll see you next time.